Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity you have, your attention. We promise to do our very best to give you a return on it. Today we have Karim of Northstar Badcharts on the show. Patrick is a fellow technical analyst with almost 2 decades experience. We're going to take a deep dive into the charts. Patrick, thank you for coming on the show.
Steve, yeah, it's an honor. Super happy there to be able to help out your viewers there. Like charts. It's look, if it's done properly, it's a great way to have an objective, unbiased evidence to add to whatever fundamental case. I'm not here like I know sometimes I get in tuffles with people about like fundamentals of companies that they don't matter, but just TA is just going to help you just really see like where you're at in the cycle, like. Are you in the downtrend, uptrend? And it really helps you, like, really understand where you are. So, yeah, hopefully we get to share some cool charts there for your audience.
Yeah, what I love about technical analysis is that it is a visual indication of price action that's telling you real time in the moment what everyone thinks this company is worth or a commodity or whatever it is. It's pretty cool. I dig it. Okay, let's start out. This is your first time on the show. Go ahead and give us a couple minutes on your background and how you got into technical analysis and how that led to where you are today.
Sure. Well, look, my background is like I grew up, in a small town in Quebec, Canada. I don't know where your audience is. I guess it's worldwide there, but maybe with my accent there, could you tell I have like a French accent when I talk, or
I can tell you have an accent, but I couldn't place it.
Yeah, it's my French Quebecer accent, and yeah, so grow up, go through the institutionalization, go to school, then you don't know what you want to do at the university, so you have good grades, and I had good grades in psychology. Okay, I'll go try to major in psychology. But then I remember I was arm wrestling with one of my friends. Right arm I beat him, but left arm he lifted his body and he broke, like my arm snapped in half there. I don't know if you ever heard a bone crack. It's like a piece of wood just like snapping. And then for like 4, 5, 6 weeks, I wasn't going too much to my university classes. But then I walked in front of a computers information school, like 1996, 97. So I said, oh, that's what I want to do. Computers are coming out. I couldn't believe you could get paid working computers. And like, I was, what? People pay you for that? So I did a career in the IT as like Linux and Mint for engineer, AIX for, I don't know, maybe 20 years, until like towards the end of that, I was really starting to do charts. Money was starting to come in. I said, where am I going to invest it? But like many people, you Google where to put your money. But look, most of the time, what you find is all the penny stock scams, the penny stock forums. There's no charts. It's like, oh, that guy says it's going to go to the moon. And then you don't know anything about risk and money management. You dump all your money in there. And like I got Steve a few times, like close, like totally wiping out. But I got lucky. Like I had the butterflies at night. I said something's wrong. I would sell my position. But then I read a book called Secrets for Profiting in Bull and Bear Markets by Stan Weinstein. We could give the links to your. I always recommend that book because Stan Weinstein is world renowned in TA. Mark Minervini, like the great trader there, he even in his book, even he mentions that it's Stan Weinstein there that he got his like the stage analysis part of his trading framework. But essentially, Stan, what he did is he said something. He says, look, in the 80s or 70s, nobody wanted the fundamentals of the casino stock companies was terrible. Nobody wanted them. But he was looking at the stocks and was seeing there were nice base, starting to break out above moving averages. And he says, goodness, man, money's pouring into this. Maybe the crowd doesn't like it. The fundamentals are bad. But he says something's happening. The market's price, the aggregate of market participants are pricing in a change, right? And it's like people like to say repricing, but repricing essentially is just a breakout out of a base. And then the price just vacuums up until it finds a new fair value, or what the market thinks a fair value is. And you want to ride that as a trader. And then I said, oh man, that makes so much sense. It felt comforting that made sense. Like maybe my IT background, my analytical background, I say, man, it's like, it's so scientific. It's either going up or down. Is the moving average going up or down? It's objective. Like I can't make that moving average go any different than where it's going, right? It's mathematical. And since then, I haven't looked back. I just tried to perfection the you could call it the art or science of chart trading. Like, but yeah, that's where I am today there. So totally, guys, fundamental guys, fine, have your thesis. I like it's great. But at the end of the day, you got to be careful because one day your thesis will not change, right? A bullish thesis, and the price is going to start breaking down. And what are you going to do? You're going to hang on because you think your thesis, like the thesis, I always say this, the thesis for gold back in 2011, 12 was great, right? Like Greece was going bankrupt, Italy, the bailouts, it was bonkers, right? But gold had a 10-year run. SPX was starting to outperform it. The price was starting to break down. The price charts were telling you the capital flows were starting to leave the sector, the miners, all that stuff. But the thesis hasn't changed. So that's why maybe also that's why you appreciate Steve. Also, the TA is going to tell you, look, my thesis might be right, but the price is not giving me any confirmation of it. So look, you got to bail, guys. You just got to bail and get back in when the money's coming in, right? Or like the doomers, like, oh, SPX will never go up. It's terrible. There's like every year there's an implosion about to happen, right? Well, goodness, it could happen, the implosion, but if it doesn't happen or the momentum's not breaking down, then probably we should cover some charts to show people how I could spot like momentum breaking down. Then why, that narrative is not going to drive the price, right? The price is going to do what it's going to do, right? It's going to do what the aggregate of market participants are going to want to do. So that's my long-winded answer to all that. It's like, once you start doing technical analysis, it's so simple that you don't want to do anything else.
Yeah, I hear you, man. I love it. Well, with that, let's go to the charts. If you guys like technical analysis and you want to try it free for 30 days, there's a link in the pinned comment below. Let's start out with the S&P 500, and we'll take a look at what do you see here with the S&P? Does it kind of look to you like it's starting to roll over, or are we still off to the races here? I mean,
Yes.
when I look at some of the technicals, the RSI and the MACD, and everything is just super stretched. What do you see with this one?
Well, I'll tell you one thing about super stretch. You want it super stretch in a bull era. On the monthly chart, when I practically never look at the RSI anymore, MACD, but they're supposed to stay high and fly. That's how bull markets are, right? Look, let's keep it simple. Look, here's the SPX.
Hmm.
It's above an inclining 12-month moving average. It's above an inclining 3-year moving average. It's above the Ichimoku cloud, which is projected support or resistance. It's above, above. So right there, it's not about is there a low risk entry here or is it time to bail? But right now, it's in an uptrend. You can't deny it. There's no downtrend. Here you had a bullish expanding descending wedge. It broke out, it did a little consolidation here, it broke out. It's like, these are just the building blocks of an uptrend. I often like to look at the momentum. Is the momentum breaking down? And the momentum, Steve, it's the distance from the moving average. So right here at the bottom pane, I have distance from the 36-month moving average, which is the red line right here. So
Okay.
essentially when everybody starts talking about, oh man, you can make so much money in the SPX, often because I'm talking to you about it, because podcasts are talking about it, because CNBC are talking about it, is because people are happy that they made money, right? They made money. It's in the past, right?
Yeah.
So distance from MA is how far the price has stretched from the moving average. And the more stretch it is, the more there's euphoria and all that. But often you'll see here, look, I'll draw here distance from MA. I can even pull it back. Like I have 200 years here of data. Look at this thing.
That's
I have
cool.
the SPX since 1871, guys. And look where, if you look at this from if you look at it from a statistical point of view, over 150 years, how many times have you been stretched 30? How many times has the SPX been stretched 37% above its 3-year moving average? Like not a lot of times, right? Like
Yeah.
the bulk of it is below. So every time you have these blow off tops, look, this was 1880. I didn't even know there was a bubble back then. Here is the Great Depression there. What did
Yeah.
they call that bubble in the 1929? I forget what they called it. But the mania 1929, look how stretched it was. And I'm pretty sure people were buying up here saying this is how you be a millionaire. Here, there's another top here. Here's the 1987 top. Here is the dot-com bubble top.
Yeah.
Here is the 2021 top.
Okay, so judging by that, it's kind of middle of the road here,
That's
huh?
right. That's right. It's not stretch.
Yeah.
It's so if people think there's FOMO, there's no FOMO yet. It's crazy. It doesn't mean it's going to reach there, but there's no parabolic blow off top yet, not yet. And I could even tell you, look here, I'm going to draw this line here. This is a break of momentum. So the moving average and the price is always able to outpace the moving average, but even more, it's not staying flat, it's accelerating. That's where you want to be, right? You want to be where the price accelerates
Yeah.
away from the moving average, right? But start low, accelerate. Once it starts topping off, it doesn't mean the price is going to roll over. Often the momentum breaks down, but the price could still go up a little bit. I'll zoom in here for your viewers.
And what's the green and the red on the right hand side?
That's the volume profiling. So this,
Oh, okay.
the volume, you have it here per time frame. These are monthly candles or per month, but
Okay.
this is the volume transacted per price. So you can know that if you have a huge congestion area here, I'm going to draw a horizontal ray. That's a lot of volume, a lot of hands. So essentially, look, great TA guys, they don't even need indicators. They just like the classical charting guys, they just need the chart because they'll know that a big pattern, know they're saying the bigger the base, the higher in space. Well, essentially, if you have a big base, you can have a lot of volume here, right? But as soon as you start breaking above, there's not that much resistance, right? The price is breaking out and it's going to try to find a new home. And you often see that as vacuums. The price vacuums up. Just like here, look, was a huge base back in 2016.
Mm-hmm.
As soon as the price broke up, it just vacuumed up until it defined a new base, right? So
Yeah.
the fast moves occur on low volume, right? And the bases are formed on lots of volume, right? Lots of people saying, okay, it's either people exiting from the previous run, taking profits, and then there's newcomers creating resistance, and there's newcomers coming in. Like, and as soon as everybody's like positioned themselves, either we have a breakout and you get sucked up, or you have a breakdown and that basing pattern was actually a topping pattern, and then the price breakdown. So guys, that's why never enter a position when you realize that you're in a basing formation, because a basing formation is biased. It's a base could also be a top, guys, right? It's a base. If you break out above it, it was your breakout base. But if you break below that base, now it becomes your topping formation. So when a pattern's morphing, it's and you realize that you're going sideways, like here, the momentum here is broken down, then the price is not able to accelerate. It's even slowing down, letting the moving average catch up. As soon as you realize that the momentum is breaking down, you step aside.
Yeah.
You just
Yeah.
wait. You don't want to be trapped because look at that. Even look how much time it took for the SPX there. It took how many years? Like it broke down the momentum here. The price topped in 2021. It's like, goodness, it's 3 years. I know, 2 years, right?
Yeah.
What was that? December 2021. Yeah, 2 years and yeah, about 2 years it took to break even. Like, goodness, you
That's
don't
a
want to
long
be.
time to be tied up and not make any money.
Yeah, you could go somewhere else. You could, but people in hindsight, they say, oh, but Patrick, it did go up. Well, fine. But because imagine if I'll do it this way, and this is a good trick there. Here, replay. Look at this, guys. What if this bullish expanding wedge would have continued? Let's say it would have failed here. It could have done that, goodness,
Yeah.
You're
Yeah.
trapped. You're trapped because these bullish patterns, they're only bullish once you break out. While you're in them, they're bearish, right? Because it's a expanding, descending wedge, right? So as soon as momentum breaks down, guys, you step aside. Let the market do its thing. And if ever the price consolidates just for a short period and breaks out again, just go back in, guys. I don't know why that's difficult. Some people, oh, I missed a few percentage points, but who cares? It's like your insurance there. At least you avoided this possible mess, right?
Yeah. Yeah. Okay, cool. All right, so this could go on for a little bit. Of what you're seeing on the charts with the S&P 500. Let's move on to gold.
Yes. Okay, gold's, I'm going to say tricky because I'll show you the gold. Did somebody ask for gold versus SPX, or is that in the list?
It's not, no, but if you want to throw it up, then
I'll throw it out too. So gold, it did break out on the monthly chart.
mm-hmm.
So you had a beautiful 1, 2, 3 congestion breakout. Now it's retesting. Right now, just based on the monthly chart, this is what I see right now. I'll just zoom in for everybody. It's a breakout, it's a retest, and the continuation will be once that wedge here that's forming above, that's probably going to be the low risk entry is when wherever this resolves here. Once that possible, I don't know where that line is going to be yet. We need 3 reactions for a line to morph into existence. But as soon as that breaks out, that's the low risk entry, right? So from that aspect, gold's great. For the momentum, it's not stretched. You see, sometimes you say, oh, look at the distance from MA. You're gonna start doing this because you'll see. I'll just put it on the. I'll put this one here. I have more data.
Okay, this is essentially gold. This is just another
Yeah,
way to
it's
look
a
at it. Yeah.
spot gold, guys. It's just because I have data. The futures on TradingView, they started in 1972 or something. But
Okay.
now spot gold, well, before 1970, it was pegged. But you get to see a little bit more data here.
Yeah.
Here's the blow off tops here, the crazy runs it had in the 1970s. And look here in the 2006 top, 7, 8, right before we plunge. Here's the 2011 top. Here's the 220 top.
Mm-hmm.
There's statistically right now, we're not in any type of blow off top for gold. We're just not. It's what actually happened is it had a momentum breakdown here where it was time to, it was not able to outpace the 3-year moving average. So you could have bailed anytime here. You didn't have to wait 2 years for it to go sideways. You bail.
Mm-hmm.
The momentum reset. And you could even say the momentum's waking up now. It's having a little hard time to really get going, but it's not breaking down by any means.
Yeah.
So that's gold on its own price chart is good. Why isn't it rocketing upwards? Gold, the crazy moves that it had here, Steve, there, these fast moves up there that had in 2000s, something special was happening to gold. It was actually outperforming. I'm going to actually add this as a compare symbol. XAU divided by SPX. And this is how I define capital flows. Look, gold was here. I'll put log scale. This is gold, the orange line, guys. It's gold versus SPX. Gold was outperforming SPX. So the money, instead of going into whatever it was back then, Amazon, Apple, Microsoft, like all the .com stuff there,
Yeah.
it was going into gold. So gold was going up on its own price chart, but it was also outperforming SPX. But look what's happening today. It's not. It's actually broken down.
Yeah.
Actually broken down, retested. It's breaking down versus SPX. That's not good. That's when I see that, I take a deep breath. So while nominally gold is fine, it doesn't have the full tailwinds of breaking out versus SPX. Because you see here, when it is breaking out versus SPX, the price really goes up fast. And as soon as it breaks down versus SPX or can go up as fast versus SPX, gold price, even if it does grind upwards, it's not grinding up as fast as it could be, right? So all the crazy moves in gold is when it's really outperforming SPX, and it's not now. So that's precarious. You don't want that. Is it going to turn around? Well, like, everybody's imagining it's going to do that at any moment. But until it does, that's a possible roadmap, right? You need to wait and see what happens, right? Even here, look at
Okay.
this, the crazy run we had here in the 2000s. When it broke out in July or in June of 2020, it was already starting to move up versus SPX, right? And now there's no signs of that there at all.
Yeah. Okay. So as the orange line goes up, gold is outperforming the S&P 500. As the orange line goes down, the S&P 500 is outperforming gold. And right now we can see for the last little while, the S&P 500 has been doing better.
That's right. And I'll tell you, this is important because the miners track that. Look, I'll just
Yeah. GDX or
XAUUSD divided by SPX. And you know what's even better than remove indicators? ASA. The ASA is a precious metals fund, gold and silver. But what's fun about it, it dates all the way back to the 1968. It's the oldest fund I could find. Yeah. Once you've seen that, you'll never look at JDX anymore. Look, JDX, it tracks this. But look at this thing. It tracks, here's gold versus PX, the candles.
Yeah.
Here is the ASA chart, the gold and silver miners. Look, it tracks the capital flows.
I've never heard of this fund. I'm going to start looking at it.
Yes, yes. Me, as soon as I discovered that, I said, ah, thank goodness, a long data series. Because as a chart trader, you need data, data, data. The more you have data, the more you look to the left, because everybody's looking at their data feed. But goodness, it's important what happened in the 70s. It's important what happens in the 80s. All those dates, they're important, right? Where's the
Yeah.
resist? So you got to zoom out. And now look here.
Yeah.
Look how the miners are tracking the capital flows. It's not always
Yeah.
perfection, but goodness, it's not.
It's definitely correlated. Yeah.
Yeah, it's so it needs gold to it tracks. So the miners, they track gold's performance versus silver. So that's why everybody says, how come the miners aren't going up? Gold's super high. The last time gold was that high, the miners were that high. How come they're lower? It's because the miners don't track gold. They track gold's capacity to take capital flows away from the SPX, and they also track XAUUSD, gold's performance versus inflation to another extent. I don't know, like a lot of minor guys, they'll say, well, oh, that makes sense, Pat, because there's energy costs, it costs more money to bring out the gold. So even if the gold is higher in price, there's so much inflation that it's difficult to mine that stuff. And here is gold divided by CPI. And even you see the ASA chart, the orange line, guys, it tracks gold versus CPI also to a large extent. Uh,
Huh.
Silver tracks it even better. Silver tracks even more.
Yeah. Let's look up silver next.
Here's silver overlaid with the gold versus CPI. It's practically the same chart.
Oh, wow.
Look at that. So people saying, how come silver's not going up? Well, look at it here. Look how the chart patterns are practically the same, right? Lower highs. It's like, goodness.
Okay. So the bar chart here is silver, right?
No, the bar chart is gold divided by CPI.
Oh,
So
gold
gold
divided
adjusted.
by CPI. Okay.
The orange chart is that's the silver chart right here.
Okay. Okay. Now I'm tracking. All right.
So you want to see gold breakout versus CPI. You want to see gold really break out. And once that happens, silver is also going to be probably breaking out at the same time, right? They're
Okay.
close. Goodness, look, Steve, people can't, it's not bearish, but it hasn't broken out yet. Again, this is the lesson people need to remember. Look, that could be a bullish, expanding, descending wedge. So essentially, while you're in that pattern, you just don't know where that thing's going to stop right before it breaks out. That's why lines are important, because the breakout is the market telling you that now the probabilities have shifted, right? That previous resistance is become support. So you got to wait, guys, until this breakout. I'm not talking about like stackers. Stackers, they don't care about the price. Stackers will just buy their ounces of gold or silver, and they know it's going to protect their purchasing power over long periods of time, right? So stackers is like, this is this is for traders, right? People who want to catch the fast moves.
Yeah.
Because the fast moves, they happen after breakouts. That's
Okay.
that that's when they
That
happen.
kind of goes into make spicy rocks great again. A uranium fan. He says, what are the most important technical signals to confirm a breakout in gold and/or silver?
Okay. Well, look, gold, I'll remove all drawings, remove indicators. So gold, it's broken out on the monthly chart. It's I could go on a different time frame, even on the here, it
Okay, we're
broke
looking
out
at the
on,
quarterly chart, right? Each
yeah,
bar is 3 months.
that's right. It's
Okay.
broken out on the quarterly chart. It's broken out on the 6-month chart, on the semestral chart. It's broken out on well, it has a close above like all-time highs and even on the yearly, it's had a close above all-time highs here. So it's not bearish. That's like a pull flag.
Yeah.
It's often this is what you see there in these moves is the flag, the pull, and then, that brings me to a target. So, but gold will have a higher chance, a higher probability of rocketing to that target once it's able to break out versus CPI, once it's able to break out versus SPX. It's really impressive gold has been able to do this amidst
Yeah.
not breaking out versus SPX yet. Very impressive.
Yeah. Yeah. Cool. Okay. Let's take a look at silver.
All right. Well, okay, here, let's go. This is the year, these are yearly candles.
Okay.
So silver has a massive wall there that's we've been identified a while back. It's 28 there.
Yeah.
Previous support and resistance. So here it's a resistance, it's a 1979 top year close. Then it gapped up, but it closed below that. Here broke out above that 20, yeah, 26, 27 area, hogged, stayed above a little bit, went down. So that resistance here, that's where we stopped in 2020. It has to have a yearly close above 26.63. It has to have a monthly close above, well, even it's a little higher on the monthly. The higher the time frame, the lower the threshold and price for breakout. 28, a solid close above 27, 28, you know. And even here for the guys who really want to try to time this, now you have this black line here. I think I did a post on Twitter recently. The two most important lines is this one here.
Yeah.
But wherever it is, so now that would be a convincing close above 25, 25.50. But the real goal time is that 28 mark. Here we could go really fast here, and then some type of flag here, and then, you know, that's like the bullish scenario, but it has, that could scale in time, right? Because you have to wait for that breakout to happen.
Yeah. 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 The big level or the big resistance levels I see for silver are 26 and 28.
Yes,
And
yes, you got it.
you
It's
got it.
there,
You just got to close above that. You know what I mean?
right? It's a wall, you know? It's like support. Look at this massive top, support, 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 breaks down.
Yeah.
Now, just picture perfect, 10 years later, 8 years later, all that support has become resistance. So I call it wall, people call it pivot lines, and can't get back above, can't get back above. So that's a hard truth, guys. That's where we are today there.
Yep.
It's still a bullish setup, guys, but it needs to break out. Goodness.
Yeah. Yeah. Okay. How about SILJ, the Junior Silver Miners ETF?
Yeah, well, right now it's just terrible. It needs, again, like this is like the ASA chart. It needs gold to break out versus SPX. It just needs it.
Yeah.
It's losing levels here. Uh, down, breakdown, retest, down, retest here. Look,
There is kind of a baseline of support around $8 though, is there not?
yes, check. I'll put the right. I'll put my volume profiling. It helps see it right there. Well, now it's we're sliding below the high volume node. So this is resistance. We just got to wait and see there where the blood stops. Yeah, here's the next level volume node right there. Look, bottoms like that. I know people they don't like doing this. People like trying to buy the possible lows,
Mm-hmm.
but this is not a place to buy, guys. The
Okay.
place to buy is above resistance, not below it. You know, you might get a low price, but again, what if the price doesn't break out? What if it just keeps doing that? And even if it does go sideways, yes, I know people like the dollar cost average and all that, but you could be spending a year this thing going sideways, for goodness, until the SPX slows down, until gold's able to outperform SPX. It could take
Okay.
time, guys.
So you would rather wait a little bit for this to break out above that downward trend line that you
Ah,
drew. Then you have so much more confirmation than trying to catch
yeah. And
the
I
cheapest
would
price.
probably wait even more there. Like I would probably wait until it's above $12 again.
Oh, okay.
Yeah, it's like I always look for my chart, like my chart setups, my low risk, high reward chart setups. And it's sometimes some instruments, even if I want, oh, I'd love to play the silver miner as well. If the chart setup's not there for me to play, I'll just look around, I'll look elsewhere, you know.
Yeah.
For me, the better setup to play is a silver chart. The silver chart is more bullish than this, right? The silver chart, it's like above the 3-year moving average. It's it's like so much better looking than this chart. This chart's like below the 1-year moving average, below the 3-year moving average. That's mathematical. You're in downtrends.
Yeah.
It's like, and when you go up, it's gonna push down on you, right? It's like, oh, you don't have the momentum with you. Don't fight. It's like somebody trying to swim upstream, or don't do that stuff.
Yeah.
It's like it's lower risk and not higher reward. It's just not there, right?
Okay.
So
Okay.
I would definitely like, wait. And if you really twist my arm, I could actually say that I could actually be super patient and just wait years later, and I could just play this huge pattern and I'd be
Yeah.
happier.
Yeah.
Because
Yeah.
that's the move. That's the move,
Yeah. Yeah. And that's going to be the one that's going to pay the most and have the most conviction. Okay. All right. Orlando wants to know about First Majestic Silver, AG.
Yes. So it's gonna look pretty much like that. I think First Majestic is a big part of a SILJ, or it's kind of weird because it's a big like or pass.
Yeah.
Like all these charts, they look alike. Same thing. It's easy. Below the 12-month moving average, below this descending trend line, below the 3-year. Note all the times I'm saying below, below, below. That should be a reason not to enter, right? It's because
Yeah.
it's
Just let it
evidence.
go.
It's just evidence. It's like you're not above. Look, you cannot have a breakout or an uptrend below a 12-month moving average. It's like eventually, look at the beautiful uptrend it had here. Look at this breakout for First Majestic. Look above the 1-year, above the 3-year, coiled and tight.
Yeah.
This is pay dirt.
Yeah.
This is what I want to trap. I don't want to trap consolidation sideways, going up, but not as I want that thing to rocket upwards. So that thing happened above, and
Yeah.
that we're not there yet. It could start somewhere here. I'll put the party probably starts up here somewhere there.
Yeah.
But goodness, like could be 2 years before the party starts.
Yeah. Yeah. Okay. All right, let's move on to uranium. Espran wants to know, would love to hear his thoughts on URA and URNM.
Yes. Guys, URNM, it's the same as URA, but less data. So for me, when the capital flows go URNM, I'll just overlay it. New price scale log. Look, they're the same charts. So
Yeah.
there's not much, even if it's different companies. That's why when I say company fundamentals don't matter that much, because when the money goes in the sector, even the badly managed companies go up. And when the capital flows leave the sector, even the great managed companies, their stocks have a hard time. So this is it for you. I broke out here, and now it's consolidating. It's moving sideways. So the momentum can make a case that shorter term momentum has broken down.
Mm-hmm.
It's going sideways. If ever that thing falls, the momentum falls below this line here, that's not good, guys. You don't want it to the momentum needs to pick up. So that means the price needs to maintain its distance from the 3-year moving average and even accelerate against it.
Okay.
But the low risk entry was back here. Now there's no low risk entry, but it's above the 12 months, above the cloud, above the 3-year moving average, above the cloud support. It's beautiful. You just want it to keep doing, what it's doing. It's an uptrend. It's showing some type of trouble here, but it's not a place to enter. Possibly exit for those faster term traders. They could probably exit, but the true signal to exit is not quite there yet. We're not quite there. You're going to need something like, here's the momentum of the previous bull run here.
Mm-hmm.
And when the momentum broke down, then the price just went sideways. Even there's a more acute rising trend line here. And each of these trend lines, the more acute they are, there's always like a retest, It's like when they're flat that it becomes the most important line ever. Sometimes when people say, oh, I have a breakout line. Yeah, but the breakout line's that steep. You think you're really going to V-shape at that same angle you went down in? It's not going to happen that way. It's going to go up and then tumble a little bit, But the horizontal plane breakouts, whenever you get those are the ones I seek,
Yeah. Yeah.
That one, it's not that bad, you see, but it's not as slanted as here. Because somebody said, look, Patrick, I have a breakout here. Well, there's still a lot of energy, A breakout out of a steep descending trend line essentially is telling you that the price is not going down as fast anymore, but it's still going down.
Yeah.
Right? It's just not going down as fast. But when you're breaking out above a horizontal line, that means you're going up, you're accelerating, and that's where you want to be. You want to be in stuff that's the money's pouring in, right? So yeah, that's my take on the URA, guys.
Okay. Not an entry right now. I know we've got a lot of new listeners into the uranium space, probably because of the recent run up, but
Exactly.
patience is a virtue. Okay. Scott wants to know about UUUU.
Yes, EFR energy fuels.
Yes, energy fuels.
So yeah, same thing, but it doesn't look. It looks worse than the URA. So here, that's the breakout line. I would
Hmm.
get interested in UUUU energy fuels only once it's above that line.
Okay.
Because now, even now, it's in danger this month. You see, it's starting to lose. Goodness,
Yeah.
it's starting to lose support, guys. So you want a wick, you want some crazy buying action. How many days left before the end of the month? Goodness, like a
Mm.
week.
Yeah.
You don't want that thing. It doesn't mean it's going to go down to the abyss, but it's telling you that the correction is going to get prolonged, right? And you never want to get trapped in a. You see, look, here's where you want to buy. The momentum is breaking out,
Hmm.
price explodes, and here, as soon as the momentum breaks down, here's a nice topping pattern in the momentum. Look what happened to the price. It just went sideways for a year and a half. Like,
Yeah.
step aside. So you want the momentum to break out here. So here, this black line has to be closed above, and this black line. If you get those two, then the evidence flips from, all that bearish technicals, they disappear, they vanish, and you pile it on to the bullish, and that's where you have a higher probability plays.
Okay. All right. Okay, let's move on to copper. So let's take a look at copper futures. There
Yes.
we go. Okay.
Surprisingly, copper, it's I looked at it today. There are COPEX, the copper miners aren't looking that bad. Copper itself is but here you have, yeah, it's still below. I'm going to zoom in for the viewers. It's still below the 3-year, it's still below the 1-year. It's trying,
Yeah.
but it's not quite there. Here you can make a case that there's a wake up, but again, it's slanted, right? I would trust it more once we close above, possibly here, all that zone here. That's probably my signal to go long would probably be once we clear this next condition area, a little retest from above. That here is the low risk entry here, guys. It's here.
Okay. Okay.
On
Just
multiple
north
facets.
of $4 a pound copper.
Yes, sure. I don't care about like the price. I don't care about percentage moves off bottoms. All the stuff I get in, it's moved up 50, 100% off the bottoms. Like,
Hmm.
who cares about the bragging rights of catching the bottom? Because if you brag about catching the bottom, essentially you're telling me that you got lucky. Because
Yeah.
most of the time you've seen these calls, nonstop calls of, oh, this is the bottom, this is the bottom, this is the top. But it's low percentage catching that stuff. There is some evidence sometimes. So let's say gold is breaking out versus SPX, and at that same time, the miners they have a beautiful wick. So like they dumped, but then the buyers came in by the end of the month and created a nice lower wick. Then you could say, okay, this is probably a bottom. Doesn't mean you buy. Depends on it's not financial advice, right? It's about depends on your trading framework. So you could use the evidence to try to spot it, but just trying to pinpoint exact bottom. Look, I don't know if somebody asked for natural gas, but natural gas, like they call it a widow maker. Like so many times people thought it was a bottom in natural gas, and goodness, I think it's lower than it's ever been, right? It's terrible.
Yeah. Let's look at we'll do that one. Natural gas futures.
So let's do the futures because I don't like too much the UNG fund. It's like it doesn't track. I don't know if there's like management fees or something, but it doesn't really track natural gas futures. When natural gas futures bounces up, UNG doesn't bounce up or boil. They don't bounce up as nicely as. Okay, this is natural gas futures, guys.
Yeah, now I
And
can't help but notice as a trader when it gets down around south of $2, uh, that seems like a decent support line. No, I mean, kind of anywhere. Well, maybe $2 isn't the right one. Maybe it's closer to like $1.50 or something. But
yes,
I don't know. What do you see?
well,
Is this trying to catch a bottom like you're talking about and just wait for the trend to reverse?
Yes. Look, that chart's really ugly. Seriously, as a chart trader, like especially based on my framework, this is like practically untradable. The only time I'm seeing a pattern where I could have probably played, goodness, I'm not even, it's like so spiky, that thing.
Yeah.
It'd be probably up here somewhere. I would have played this maybe, and then I would have maybe done a measured move. Goodness, it's so messy. I would have probably added this on the breakout line and exited like somewhere up here, but it's look, it's below the 12-month moving average, below the 3-year, below the cloud, below everything, right? So are we going to get a crazy wick? Maybe. But if you still get a lot of people here were buying. I remember here like 5, 6 months ago, oh, it's at $2. It did bounce. But again, just like I said before, when you bounce up, you still have downwards momentum. So even if it did, goodness, it's like even if it did bounce up, there's still gravity, man, dragging that thing down, right? You need time and bait. Look, this crazy move we had here, Steve. This move here, it only happened after 10 years, 20 years of sideways grind.
Yeah.
So maybe somebody on the daily time frame could probably play this, like, day trade that, have fun with that. But as a buy and hold for many years, that thing's like a heartbreak. Just play the SPX where it's just a beautiful uptrend. Like,
Yeah.
why go mess around with this thing? It's going to kill you.
All right. Okay, so you're not a big fan of UNG. How about Boyle?
Yeah, same thing. I'll show you because Boyle with the look at that. Why is Boyle just going down the drain? So even while the natural gas futures had a crazy bounce here,
Yeah.
I'll just show you. I'll lower that, guys.
Oh, so the
Maybe,
orange one is Boyle.
yeah. So here's Boyle. So
Oh,
even here, NG went practically up high to its 2008.
yeah.
But look, it barely moved. Boy,
And it
something's
just
wrong with that
didn't do
fund. Like
anything.
somebody
Yeah.
could analyze that. Why would you play that? It's skewed downwards. It's
Yeah.
like even when natural gas futures do go up, Boyle manages to not go up as much. It's terrible.
Maybe the management fees are too high. I
Maybe
think I
maybe
looked
carry
into it like a
trade.
year ago and just dismissed it.
Yeah, there's some fees somewhere that are leaking into that, and it's just creating just a terrible performance.
Yeah.
Yeah.
Okay. All right. How about EQT, Equitable, the natural gas?
Yes, yes. So these companies, even if they deal in EQT, it's yeah, even if they deal oil and gas producer, yeah, $15 billion company, natural gas. So even if it's the natural gas companies look better than the futures. So the utilities and all that, maybe they hedge, maybe they're able to take opposite positions if ever natural gas futures aren't stable or they want to protect
There's a
the
big
price.
arbitrage too, because we
Yes.
can pull it out of the ground pretty cheap here, and Japan's paying like I think $8 or $9 a million BTU. So there's a big arbitrage there that makes it profitable for them.
The chart's not bad. So what it did, it broke out here, back here, even here, back tested it, broke out above the 1 year, above the 3 year. Now it's lost the 1 year. So as soon as we lost the momentum, and
Hmm.
look, you'll see it again, guys, here. Look at this beautiful rising trend line momentum. As soon as the momentum broke down, then it's step aside because a bigger pattern's morphing into existence. Again, another descending, a bullish, expanding, descending wedge, which means it's a downtrend until it breaks out. So now we just have to wait. That black line there, that's probably going to be the next greatest entry in that stock will be up there. And the momentum will also probably be breaking out eventually. So look again, look at the crazy moves that went here.
Yeah.
The momentum broke out here. It's accelerating above the 3 moving average, distancing itself more and more. Money's pouring in. That's where you want to be. You don't want to be when money's sucking, like pouring out. So you got to wait until some type of black line here is going to morph into existence. Maybe I could do it here. It's pretty steep, but you got to wait at least for that. And you got to wait for at least this. I don't know where it's going to happen.
Yeah.
Could happen here. It's bouncing on the 3 moving average. It's getting close, but you don't want to buy in here, guys, again, because this this could just kill you emotionally. Explaining your wife why you put your life savings in something that's just gone sideways forever.
Yeah, and it takes 2 years for it to ever realize. Yeah. Okay.
Yeah, just just wait, guys. It's the beauty of charts. You do that. You do what I do, guys. Here, go on the scale. Right click on the plus, set alert, and go play golf with your friends. It's done. It's done. You don't have to stare at the screen, right? You could, just go out, have fun.
That's good. I like that. Okay, let's move on to oil.
Oil.
So oil futures.
Black gold.
That black gold, yes.
That saying, they've been saying it for a while, because I remember now I have like flashbacks of some pop quizzes we had in elementary school, elementary school. And I had a flashback of the teacher asking us what is also, or maybe high school, what is known as black gold? And somebody said oil. And I said, oh man, that's so cool. Like, but I didn't realize like the importance of oil back when I was like, a teenager. So this is oil.
Mm-hmm.
You can't say, look, again, it did the breakout, back tested. The momentum broke down here. So it's time to step aside. Look at the momentum. As soon as it breaks down, you step aside. Now we had a rally up here. So that's morphing into existence, this possible trend line. You need 3 reactions on the line. As soon as we have a tiny reaction here and it breaks out, it's go time.
It's
go
game
time.
on.
I'm going to call Steve. Let's go, Steve. Empty your swimming pool, fill up with oil futures. Tell your wife you're going to be swimming in oil this summer. Because that's when you go. Because right now, again, as soon as you realize you're in a consolidation pattern, get out of there.
Yeah.
Because a consolidation pattern could be a continuation pattern, but it could also falter at worst, but it could also just go sideways. Again, I know it could just go sideways for a few years, and that's terrible on the emotional capital.
Yeah, yeah. And the bankroll.
But it's not looking that bad there, Steve. Look, it's starting to this is actually, look, the momentum's here, breakout above the momentum here, above. It's not that bad, guys. It's not that bad. So the target gonna be crazy though. When this breaks out, we're talking about like $200 oil there. Goodness.
We like the sound of that. Okay.
Yeah, it's gonna be something like this there. It's gonna be 200, it's gonna be I don't think people will believe it there when it breaks out.
Yeah. Okay. How about Exxon, XOM?
Yeah. So there's 2 charts for Exxon. There's the dividend adjusted chart, which looks, so here's a dividend adjusted chart. People don't often look at that, but.
No, how did you pull that up?
Here, see bottom right here, ADJ.
Okay.
Click on that. Here's non-dividend adjusted, and here dividend adjusted.
Oh, interesting.
You see how much higher the high is?
Yeah.
Dividend adjusted. Here, okay, I'll just do. Here's Exxon chart. I love the Exxon because we have data since 1968. That's a great buy and hold there for. Okay, here it lost momentum, but after this breakout, goodness, it's like it's continuing what it's done for 40, 50 years. And this was a bear market for commodities, but look at Exxon. Like you couldn't even, that thing didn't, it just did great there. So dividend adjusted, but because you're paying out dividends, the non-dividend adjusted chart, the markets have to price in that money getting given out, right? They're not going to keep high valuations for the non-dividend adjusted chart. So it did also good non-dividend adjusted, but not as, this is more visible on maybe Shell Oil. There's other high dividend paying stocks like PBR, Petroleo Brasilio there. Like they used
Petrobras.
Petrobras.
Petrobras, yeah.
Yeah. They pay so much dividends that you look at the regular chart, it looks good. You say, I'm not making that much money, but if you look at the dividend adjusted, man, those 20% they kept paying that chart, you've been in the money for a long time.
Yeah, yeah. Oh, I love that. Now I can start charting with dividends. I didn't even learn something new every day, Patrick.
Oh, goodness. Same here, man. Same here. Because you'll ask me a question, and if I don't have the answer, my brain's gonna say, okay, goodness, how do I get the answer? It's like,
I think maybe both of us have a mild dusting of Asperger's where like we just dive into something and forget to eat.
Oh man. Yeah, for sure. Yeah, we just didn't have labels on the spectrum when we were kids, right? Like
exactly.
Oh, that guy's he's a workaholic, but no.
yeah. Give him Ritalin and calm him down. Okay, let's move on to platinum and palladium.
Okay. Goodness, we're doing so platinum, guys. Again, just like silver, it needs gold to break out versus SPX. There's nothing to do. Stay clear until, at the very least, this is broken out of.
Okay.
Stay clear. Let the market do the hard work for you. look, this is the bullish case. And goodness, it could be like 2025 before this thing breaks out.
Yeah.
You
Yeah.
know, it helps mitigate expectations, right? That's critical. Any good company is going to always mitigate expectations, because if the expectations are too high, you're set up to lose in advance, right? Because you'll never be able to deliver, right? So if you put on a chart, then you say, look, like, even if it does break out aggressively, like, even I could time the sub, but goodness, you got to be honest there. It's not gonna, like,
Yeah.
everything resides. The SPX has to start cooling down. Gold has to break out versus SPX, and then all this stuff we're talking about, we're golden. But it has to happen.
Okay. Okay.
So look again, guys, go play golf. Send an alert. I'm gonna put my alert at 1,050 about, and I'm not even gonna think about platinum until that's crossed above.
Until that's broken. Yeah. Okay. Okay. And palladium, is it pretty
Yeah.
much the same?
Well, no, Palladium. You know what? Palladium. It's and now it's really it tracks the SPX very much, except recently. So I could overlay the SPX chart, and it tracks more. Look, I'll put the SPX. Oh goodness, no, symbol search, compare search, SPX, new price scale, log. Look at that.
Huh.
It tracks more of the SPX, except here now. And this is the bearish case for the SPX. This what's happening here, or you could say the bullish case for Palladium.
Palladium.
Yeah, because this is Palladium, guys.
Yeah.
This is SPX, and over long periods of time, look, Palladium. Oh, you see, look, that's crazy here. Look at that. Palladium started going down, and then the dot-com bubble kept going up here. So the markets are melting up. Palladium's going down, telling you recession or whatever, some fears of somewhere. Oh, it happened again here. Goodness, look at that. We're discovering stuff. Here's Palladium topping out. Palladium breaking down, but look, SPX is going bonkers here.
Yeah.
But look what's happening to Palladium now. It's topped out a while back. The market's starting to go down with it.
But then the market reversed and palladium did not.
Yeah. So now is this just a lag effect? And then the SPX is this, because this is not good there. There's never been these hard drops in Palladium without the market taking a hit.
Huh.
So yeah, that one's kind of sobering, right?
That
So
I've never put that pattern together before with the
yeah,
SPX and palladium. That's
yeah, they
interesting.
relate more. Palladium's the odd man in the precious metal stuff, because it doesn't track gold. It doesn't look, gold is not doing that. Even silver's not doing that, for crying out loud. Silver's
Yeah.
holding a lot better than that. Oil's not doing that. None of the uranium's up.
Yeah.
Palladium is like, it's the odd man out.
Yeah. Huh.
So
Interesting.
so that
Okay.
one's omnious looking. Unless you're telling me that Palladium's about to rocket and the market keeps rocketing upwards, right?
Yeah. Yeah. I'm gonna study that chart. Okay. Let's see. Pennies to Pluto wants to know about Bitcoin. He says, when moon?
Ah, goodness, yeah, the red moon there. That little kid they keep putting a picture of, right?
Yeah, exactly.
Okay. So on the distance from MA, Bitcoin is not stretched by any means. Here are the previous tops for Bitcoin stretched from the moving average. Right now, it's just getting going, right?
Just getting started.
So the next resistance is probably somewhere up here. So when Bitcoin's like 133% above its three moving average, even a little lower here, there's a little, then you could say, oh boy, okay, something, it's maybe time, but we're not there yet at all, It's all, Bitcoin's been an uptrend for a while, but it's all about what's your chart trading setups? What are you looking for? Where do you want to enter? But it's happening here. I think there's going to be some type of reaction here, some bigger pattern that's going to morph into existence, and that's going to be the low risk. There's going to be something here that's going to happen, and that when that line morphs into existence, because you need three touches, 1, 2, 3. If ever that happens and there's a breakout, for me, that's the play. That's going to be the equivalent of even something like this here, even here,
Yeah.
that's going to be the equivalent of a huge base like that, right?
Yeah.
So there was a pull flag here, but for me, it was unplayable. So there was here, pull, flag, pull, the target. So what the beauty of it, the target is matches perfectly where I'm anticipating some type of, hopefully some correction or consolidation, because if it doesn't consolidate, it's going to be very tough for me to play this, right? I want it to do some type of reaction here to slow down so I could anchor. So for twofold, if it reacts down, it's telling me that line is important. It morphs into existence, right? It has 3 reactions. It's a valid trend line.
Yeah.
And it permits me to anchor a sell stop safely, because if it's just white candle after white candle, where the hell am I going to put my sell stop? Sorry, the language, guys, but where am I going to put my sell stop?
Yeah.
You want, here's my sell stop here. Let's say below that red candle here, I enter here on the breakout, and then, you ride wherever, right? You need the risk reward 4-to-1, 5-to-1, but I'm looking for something like that here. I would probably buy at 61,000. I know people, they say, Patrick, and then I'd probably play up here. So I could still buy at 60,000, put a sell stop. Let's say I have a red candle that goes back all the way down to 45,000, put my sell stop below 45,000, and I could have a target. Goodness, even the target, it could be like, we're talking a high target. Could even have a target all the way up here to 180,000, and I'll have an 8-to-1, and I'll make my money, I don't, like I said, price could go up 50, 100% off the bottoms, and I won't even care, because think about it this way, guys. To have an uptrend, price has to go up. How do you know you're an uptrend without the price going up? Think about it. And people don't, they're always the mentality, I have to buy it as low as possible, but I have to sell at the highest spot. Like, no, you need an uptrend. An uptrend, guys, is higher lows and higher highs. And this trend line here, this possible trend line here, if we close above it, it's going to confirm that I also have a higher high. So we're doing higher lows now. Then I'll have a higher high. That's like, I'm happy about that,
Yeah. Yeah. Okay. Clyde wants to know, what is your take on the Chinese stock market? Is there anything in there you find attractive?
China.
China.
Yeah, it's not looking good. And actually, I think it looks like a little bit like the Palladium chart there. I'll overlay Palladium. And once you start looking at these charts all the time, you see, yeah, look, it's the Palladium chart. It's bonk. Look at that thing.
Interesting.
Look at that. It's practically the Palladium chart. So where one goes, probably the other one goes. And you need nothing to do until this line, here again, guys, look at that. As soon as we lost momentum here, it was time to bail. It's just, you just bail because you don't know if it's going to grind sideways, if it's going to drop more. It's like, this is just terrifying to be here, not sell. And now you're below the 1 year, below the 3 year, below the cloud, below a huge volume defined base, which is now resistance.
Yeah.
But goodness, it's like, it could be years before this thing,
Yeah.
And meanwhile, others, it could, like, even this is a bullish roadmap, but it's not enacted until the trend line breaks.
Yeah.
So it could take a while.
Yeah. Okay. Okay, cool. Are there any other ones that you want to bring up? That's everything for the listener questions. Is there one that is on your mind that you'd like to share?
Oh goodness, man. I think we've covered everything, Steve. Yeah, I hope people they enjoy like the value they got from that, because that's yeah, we did a whole market recap. Usually we do this for our members behind the paywall there, but let's have fun, guys. It's there's a lot of moving parts, and the charts, they really help remove the noise, remove the daily noise. I'm on the monthly candles. Like sometimes on the daily I get excited. I'm a human, I'm emotional, but at the end of the day, silver could be going up 3%, 3%, 3% day after day. And if I don't get my confirmed breakouts, I'm just going to say, well, I'm going to wait, So it's about what you guys want to do. Do you want to preserve your emotional capital? Because once that's gone, you're a goner, right? It's like pros, even the best boxer or the best basketball player, as soon as, let's say he's having a hard time in his life and he has no, as soon as he goes to the game and his brain's burnt out, he's going to forget how to dunk, he's going to drop the ball,
Yeah.
So your brain is your priority number one. For healthy and solid brain, you'll be able to preserve your capital. That's priority number two. Or yes, it's probably priority number two, because you're probably going to go on tilt. You know how poker players, when they lose their mind, they lose their stack. Same thing with trading. Preserve your brain, your emotional capital, preserve your actual capital, your cash. and survive until you get the ultimate chart setups that you want. Don't feel FOMO, guys. If somebody says, oh, you're missing the bottom, turn around. Okay, fine. Good for you. You missed it. But in hindsight, that guy who called the bottom, if the price would have went down, you're never going to hear about that guy again, right? They're only going to rub it in because the price went up, right? But look, respect your framework. Never mind what the neighbor does. And that's going to help you sleep better at night.
Okay. All right. So if people can follow you on Twitter, there will be a link down in the show notes, Badcharts1 on Twitter, and your website, if they want to check that out for your service. It is northstarbadcharts.com, which there will also be a link in the show notes. Patrick, thank you very much for coming on the show. This is a pleasure. I hope maybe we can have you on again in the future.
Thanks, Steve. It was great, man. Thanks for letting me rant like that. It was brilliant.
Oh, the pleasure's all on this side of the table, sir. Thank you. And thank you for always being here. Try out the software we're using. TradingView, free for 30 days. There's an affiliate link in the pinned comment below. I want to grow my finances just like you, and it doesn't cost you any extra to try it. Support your favorite podcast in the process. Thank you for tuning in. Hit the like and subscribe. And share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.